Canoo has a market cap of $188 million, and their shares are trading at $264 today and are down exactly 50% year to date. And taking a look at Lucid, they have a market cap of $8.7 billion and are trading at $379, who are faring a lot better right now, being down 8.7% year to date. And zooming out, it's pretty clear that neither of these stocks is doing very well right now, so let's see if that is set to change. For my December 2026 price projection, Canoo's revenue per share is expected to be $1.02, and their current price of sales is $351, but I'm going to use 4 for this calculation because it's just a lot more realistic, and that would give us a stock price of $4.08 a share, which is 55% higher than where it trades today. As for Lucid, their 2026 revenue per share is expected to be $158, and their current price of sales is $10.6, but again, this is also pretty high, so I'm going to use 4.6, and that gives us a share price of $7.11, and that is an 87% upside. As for one-year price forecast, it looks like analysts are expecting GOEV to be trading at $488, which is an 85% upside, and for Lucid, they're expecting a price of $330, which is a 13% downside. And on to earnings, Canoo has beat all 4 of their last earnings calls, while Lucid has beat 2 of theirs, and of course, neither of these stocks offers a dividend. As for the debt situation, GOEV has a shareholder equity of $184 million and a total debt of $95, which gives them a 52% debt to equity, and they have a negative $214 million cash flow. For Lucid, they have $4.7 billion in shareholder equity and a total debt of $2.1, which makes their debt to equity 44%, and they have a free cash flow of negative $2 billion. In terms of revenue and net income, Canoo has almost zero revenue and a negative net income that does seem to be trending upwards, whereas Lucid's revenue is pretty stable, but their net income is again negative and pretty flat. Overall, it makes a lot of sense that each of these have very high valuations and huge negative free cash flows, given these are both growth stocks in a growing industry, and it's surprising that both have a good debt-to-equity ratio, though, to be honest, given the state of the industry right now. But really, the big difference between these two stocks is just the sheer size of the companies, because Lucid is definitely the bigger fish. It has a market cap 47 times higher than Canoo's. That aside, though, I think they do offer a pretty similar value given their growth potentials and valuations, and because the latter is so high, unfortunately, I do have to rate both of them a hold at this time, but I really do like their growth projections, and if those valuations were to come back down to earth, back down to some reasonable levels, then I would seriously reconsider each of them, and honestly probably upgrade them to a buy. But anyways, that's all I have for you today on Canoo and Lucid, so please drop a like, let me know which stocks you'd like me to cover next, and of course, I will see you next video.